JSW Energy is the stock in focus. Let's get Sharad Mahendra in on the conversation on the numbers and the outlook ahead. That stock is up 0.5%. Mr. Mahendra, good having you. Thanks for taking the time out. How do you view the quarter gone by?
See, quarter has been, in two ways we see this quarter. Quarter has been phenomenal for us for the reasons. One is, of course, in terms of the revenue, in terms of the margins. But apart from that, some few big actions which going forward are going to be a key differentiator in our performance is a very large return accretive acquisition of KSK, which is now JSW Mahanadi, which we have acquired on 9th of March, 6th of March. So this is one, and which has in fact demonstrated in just 25 days of operations what we have been able to turn around this asset, what it has performed for maybe 340 days, what we did in 25 days. That gives us a lot of confidence that this is going to be a big differentiator. Addition to that, the acquisition of O2 Power, which we had announced earlier, we have completed on 9th of April. So these two are major drivers going forward, which will play a significant growth, both on our revenue, on our margins, whether it is at EBITDA level or at PAT level. These are the key differentiators. I see that quarter two has been very, very instrumental. In addition to that, when we talk of generation in quarter four for us, we have seen a growth of 24% generation growth. And the key drivers to this have been that RE portfolio growth has been 34%, but out of which 67% growth quarter on quarter has been because of the wind capacities which we have added during the year. Despite not reaching the wind season, peak wind season, it has to start now. Despite that, there has been a 67% increase. And also the generation growth has been led by the acquisition of KSK 25 days, which we have got, plus our JSW Utkal unit in Odisha, which was operating with one unit of 350 megawatt. We have been successful in commissioning the second unit in March, and Utkal plant has stabilized. So these two drivers in thermal space and the RE capacity additions have been the major drivers for quarter four in terms of generation growth of 24%. Maybe the demand growth was under 4% in the country.
So operational performance, Mr. Mahendra, with the RE additions, are there upsides possible to the operational performance?
We see upside, as I told you, and the upside drivers are, as I told you, the three. One is that KSK unit 2 of JSW Utkal, and the wind capacity which has not witnessed the peak season.
Get your point, sir. Now, how do you see the Mahanadi contribution for FY26 and 27? Does it contribute significantly in FY26 and into FY27, or will you milk it enough in FY26 itself?
See, two things. I tell you, there are certain steps, majority of things which we will be able to get the benefit for maybe at least 10 to 11 months of the year. Some of the actions which we have implemented after acquiring the asset and started operating on 6th, our full team is in place, which we were ready with. We have taken certain actions in a span of only 15 days, which is resulting, bringing in significant operational efficiencies. And in addition to that, this plant has run for only 67.4% PLF full year. And in 25 days, we ran this plant with a PLF of 77% and a deemed PLF of 99%. And one of the big opportunity which was there as compared to what it was not being done during this EIRP process was the merchant capacity of almost 90 megawatt. And it is a very low fuel cost plant because it is very, very close to the coal mine that we are selling this entire untied capacity, which was not so, almost negligible sales were there in the merchant market. We have already started from 1st of April. So, and in addition to that, lot of operational efficiencies. When we as an IPP are running the plant as a company and the RP is running, there is a difference. Lot of improvements we have already implemented and a very close monitoring is being done. So, as you said, maybe a large portion of the benefits we are going to get in the current year only.
Okay. And last question, macro one, Mr. Mahendra, interest rate cuts likely on the anvil. How do they impact your capex plans and interest costs?
Yes, yes. Very right, this thing. If you see that we have announced our strategy 3.0, reaching 30 gigawatt by 2030, in which we have said that FY26 to FY30, a capex of maybe 1,30,000 crores is what we have announced. And with this downslide, which we are seeing in the interest and with the inflation numbers, which have again come, we are certain that there will be definitely softening in the interest, which is going to be beneficial not only for us but for in general for maybe capex intensive industries, which is going to be there, and the liquidity availability improving definitely will augur well for the industry and also for us.
Okay, Mr. Mahendra, we'll leave it at that. Thank you so much for taking the time out and being with us. Really appreciate your time.